right, stream should be up. Let's see if we can find a link here. I don't think any of you guys really care about watching the stream, but I'm going to post it anyway so you guys can see it. I'm about to fill up my coffee, so we're about to go 45 minutes with no coffee. I'm going to freak out. Let's go through today's stuff. First off, before we go, I'm going to read this DM I just got. Does anybody have positions that they opened up today that they want to go over? First off, updating stops, take profits. They want to share their trade executions. Most of us got into STEM today. I feel like we should start there. Let me read this DM really quick. If you got into anything, please post the ticker on the trading floor. Vinny, I just read your DM. That's it's a hefty question, and I think that it deserves a better answer than what I'm going to be able to give you right now. So let's wait until the end of this session here, and then we can talk through it towards market close. I'm going to look at something really quick just to make sure that it even makes sense. I'll give you a right off the bat. What the heck is going on with Koifin? So really quick, STEM is not an IGV name. And this isn't the full answer, but if you're looking at the ratio chart between STEM and IGV, it doesn't inherently make sense because IGV is I'm going to double check this, but it has zero representation within IGV. It is a PBW name, which is clean energy, which does have some overlap with IGV, but it's not actually held within IGV. And as a matter of fact, Koifin calls this an industrial name, but as I look through the different sectors and industries in regards to shares held, PBW is the only thing that really is holding a significant amount of shares here. So what you'd want to look at is STEM against PBW, not STEM against IGV. PBW. And you can look at that when you go to the bottom left-hand corner of Koifin and you type in STEM in the security analysis portion. If you click ETF exposure and then rank it by shares held, you can see which ETFs are going to be holding the most amount of shares. And you can actually see which ETFs hold it whatsoever. And there's zero exposure in IGV. Okay. Vinny grabbed EQT and STEM. Dom grabbed STEM and EQT. EQT Oct erased. Yes, they did. Welcome to swing trading. This is what makes it exciting, right? So we can talk through this really quick because this is a point that we were talking about yesterday in regards to buying on up days versus down days. So the mechanism that we utilize to get long in lots of these breakouts is not same day breakout entry. We do not. Typically, unless there's some crazy situation going on. What we want to do specifically as options traders, but this directly applies to shares trading as well in Serge's situation where he's buying shares. Buying on a pullback day is almost always going to give you a higher risk to reward for two reasons. You're getting a discount on the initial position and the stop is going to be inherently closer than originally buying it on the breakout, even if it's in the exact same spot, because you're going to be buying while price is pulling back in towards the stop as opposed to buying as price breaks out and goes far beyond the stop, right? So buying on a red day is going to give you a higher risk reward from those 2 points to begin with. But secondly, you're also going to be able to be taking advantage of people that bought the original breakout. So for example, I bought EQT 2 or 3 sessions ago on a pullback. That was the right call at the time because it punished everybody that had bought the day prior or the 2-day prior. When I bought it, EQT had been already in a 4-day uptrend. So those premiums on those contracts have been appreciating for 4 days straight. And you can go back and check the value of the contracts over those 4 days to confirm that. When you buy on a red day, you're going to be profiting off of people that bought the previous day at the minimum, but it could be multiple days if it's a multiple day run up, as they dump their contracts because they're afraid that maybe they bought a fake out. Now we know, we talked about this yesterday when EQT was breaking out, that it was a high volume breakout. Remember, we said our vol is above 1. We're using the $50 area as our risk on. We closed EQT above 50 at 50.60 with an R vol of about 1.45. So at the end of the day, people were going, should I be looking to enter an EQT? And the cool thing is, now that we record everything, is that we can reference what we were talking about at the end of the session yesterday. And we specifically talked about that there was a higher than usual chance of a pullback in EQT today. Now you could sit here and say it's because of the energy sector is down. It's because of this. It's because of that. It doesn't necessarily matter. What matters is that we were planning for a pullback today, regardless if it's sector related or if it's strictly because this is a high volume breakout on a pullback. We talked through this yesterday at the last hour. And so people had a decision to make. Did they want to buy EQT end of day or wait for a potential pullback, which we had expected to happen because statistically the high R vol gives us that potential pullback. So the guys that waited for EQT today are getting a discount, and the guys that bought EQT yesterday are paying the price of buying prior to waiting for a pullback. This is why 99% of the time when we enter positions in here, we love uptrends, obviously. If we're going long, we need an uptrend. But we strategically target the areas of the chart that make sense for a pullback in a stronger uptrend, right? So we're getting that discount. Today, the guys that are getting into EQT are getting the discount. They're reaping the benefits of the BRB setup that we were discussing late yesterday. The guys that bought the original breakout are going to have to hold through a statistically proven pullback. If EQT bounces over the next day or 2 or 3 days and we get up to 57.5, everybody, regardless of whether or not you got in yesterday or today, is going to be in profit. The difference is that expected value chart that we reference all the time. The guys that bought yesterday, specifically end of day, are trader A. They bought at point A. The traders that bought today are going to be point B. If this does continue on up to 57.85-ish, let's say, the trader at point B is going to be more profitable than the trader at point A. Because guess what? If, let's just say in a hypothetical situation, this shoots up 5 days in a row, hits that profit target, those guys that grabbed the exact same contracts on a down day are going to be exponentially more profitable than the guys that bought them on the way up. It's just how this shit works. So in the future, if you're looking at something and you're feeling FOMO, for example, understand that that reaction is hardwired into your brain through hundreds of thousands of evolutionary changes and mutations and everything, but that actively sabotages you in this market. And if you start realizing, like, I'm going to fucking miss this breakout, I'm going to miss it, guess what? Fucking miss it. There's another trade to be made. But more often than not, on a breakout with that type of volume, you're going to get a pullback the next day. So just sit and wait. EQT still looks fine here. From the trading plan that we're looking at, we're using the $50 area as a potential risk on. The original risk area that we were looking to go long, the last oscillation up was 47.50. This is well within its ADR. As a matter of fact, the ADR today is 3.3 off of a normal ADR of 5.02. So unless we capitulate here end of day, this is actually a less than normal move to the downside. RSI is holding above the 50. EQT looks totally fine here. So nothing that we haven't seen before. Swing trading rewards people that hold quality positions regardless of the oscillations in between. The only time we're going to be looking to close EQT is if we break below our stop somewhere $46, $45 area and we determine that the trend is over. Otherwise, you're doing yourself a disservice by not holding that play. Let's see. The other names that we bought really quick. STEM. We bought the STEM play. This is another good example of waiting for the pullback. For the guys that were here for the strategy session last night, you know, what was the plan? The plan was that it had continued up after hours by 20 cents or something. And so when we were talking about it, what did we look at? Horizontal level. What did we say the risk on area was? Around $17 is what, or $16.75 or whatever is what we were looking to originally target. Our vol was 1.5 damn near. So we knew this was a high volume breakout over a horizontal level. What did we expect? A pullback. What did we say was our target entry? Anything sub 17. But we understand that whole numbers typically get cracked and lead to what? Larger than usual moves in either direction. If we're breaking up and over 17, we normally get a run temporarily over 17. We get a break below 17, we normally get a run temporarily below 17. In this case, because we're waiting for a pullback, we would expect if 17 broke a minor run below 17. So where was our original entry area based off of last night's strategy session? Anybody remember? Awkward we sit here till somebody says something. Most of you guys were here. So 1670, 1675. What did we come down to today? 1662. So we got filled on the pullback. Now imagine if we were chasing at open. Imagine if we were chasing at 1775. This thing came all the way up to $18. Imagine opening at $18. And now you're sitting in a position that's down $1.05, and that contract is probably down 25%, 30%. You're sitting there sweating bullets. But in here, you know that these types of events happen more often than not, so you plan for them. So for us, and looking at the contracts option history, we had a low today of 72. Most of us got filled in the low to mid 70s, currently sitting at around, what is this, an 85. So these are profitable for us. We should be green on these stem plays. Because I did not get filled on Corteva, because we got in on the pullback. So that's why we preach this. That's why we try to drill it in. Buy on the pullback, not on the breakout. Buy on the pullback, because this is still a breakout. It's still validated. And let's say, for example, tomorrow we gap down or something and it invalidates the idea. We are sitting in minor profit. Let's say at close, we gap down. Shit. We close for 25, 30% loss. What happens to the guys that bought at 18 on the same day? Those fuckers are down 75%. And they're making the same decision we're making, but the difference is we're salvaging an additional 40 to 50% on our profit or on our contracts. So we get to claw that back and have that premium still in our account to make another play, make another opportunity. Those guys don't have that. This is why we practice and preach that BRB method. Okay, so those were the two plays that I know for sure. We were getting into Corteva. I did not get filled. Did anybody get Corteva today? I think Corteva was probably a pretty decent one to avoid. I originally had contracts on the order book, but I removed them when I was going to lunch because I just was not looking to let orders sit on there when I wasn't there. So nobody got filled Corteva, totally fine. We got filled on STEM. STEM still looks fine. Looking across different sectors really quick. Okay, so we do have some shorts. I'm going to remove Corteva. Actually, I'm going to keep Corteva on the watch list right now because it's still not necessarily invalidated this setup. We're just not breaking out today. Good relative strength on ASO, even though we're down 0.07. So I'm going to continue to hold that position. On an ADR of 3.93, this has only moved out 2.6. So once again, is some relative strength in some of these plays. Rivian, relative strength. Dustin, are you in here? You are. Are you still in your Western Digital and your International Paper short? Okay. I don't think we need to update those, but just wanted to make sure. So I think that's pretty much for the most part. I know Alex is still long Rivian. That looks fine. We're still long PCG. That doesn't look bad. We're down slightly today after being up yesterday. Oscillations, we're only down 0.83% on PCG. Everything looks okay. So now I think what we should do, we should focus on, since we do not have a meetup tonight, I think we should scan. Let's scan. Short Pfizer and Disney. I haven't even looked at Disney. I know Pfizer was a doozy, but are you in profit on Disney? I didn't even know you were short Disney. Yeah, the Pfizer play followed the sector, which found support at the same place. It's found support like 100 times in the last year and a half, 2 years. So you're plus on Disney. Cool. Okay. Well, I'm going to add this to the watch list, but I had no idea you're even short Disney. So, okay, let's scan for lows since Spike said anything to the downside. I'll post the link to the scan, 50-day low, average volume over 1 million. Optionable and shortable. Start here. Not a bad place to start. So what we can do here is I'm going to go ahead and filter these through by sector and then go to the charts tab. We can go through, there's 12 pages of fucking charts here. This is just the 50-day low. We'll hit the 50-day high later. Probably not going to have too many on that list, but let's try to find themes here and horizontal levels. Only markets that we necessarily want to still have long exposure sector-wise. Energy, utilities, consumer discretionary, that's it. Longs outside of those, and you're going to be fighting a broader trend to the downside. XLC looks like we may close down here at a 2-year low. Consumer discretionary, although it is down today, is still holding those May to June highs. Staples, 50-day low today, fell off of a cliff. Industrials hitting a 50-day low. Materials hitting same area it was just 10 days ago. So this is a pretty brutal sell-off in materials, actually. Real estate appears to be a 50-day low. So if you guys didn't see the mortgage rates, 30-year mortgage rates hit 6% for the first time since 2008. Not necessarily the most bullish thing for real estate, I would assume. Utilities took a dump here. It's easy for me to point out this tech short, if you will, in hindsight. But this is the same chart we've been looking at for a while, like last 3 trading sessions, I guess. That is a rounded top with a horizontal level break. You know, we've been talking about the 132 pivot to the downside. RSI is now oscillating firmly below the 50. This is why we did not take tech longs, even though we were looking at taking consumer discretionary longs. So just because one sector of the growth area is looking okay does not mean everything, remember? So bake this in. Sector, for the newer guys in here, sector and industry performance trumps almost everything that we do, because we believe in the statistical work that it gives us an edge, and in this case it did. We did not go long tech. Tech getting killed here today. Looking at industries really quick, TAN is down now 4%, but still within a horizontal range that we've been in since the end of July. Energy is down. IGV is down. IGV just hit a 50-day low. IGV is your software industry. Semiconductors down 2%. Semiconductors are threatening a 2-year low, and they still have 25% to drop to their 2020 highs. It seems kind of ridiculous to expect that to happen, but at the same time, it's almost ridiculous to write it off completely. So there's a lot of real estate to the downside in semiconductors. Then there's areas of the market that are holding up relatively well. I mean relatively because they might be minor red, but they are not showing the same sort of sell-off as the broader indexes. For example, retail is only down 0.21. And as a matter of fact, it was green for a lot of today. Jets is up for whatever reason. We saw earlier today names like Royal Caribbean was up. Carnival's up. Norwegian Cruise Line is up. So Cruise Line and Jets are up. That's a consumer discretionary area. KRE is up, yeah. KRE is up as finance is down. Oh, actually, finance is up. Sorry, excuse me. Finance is up. It's the only sector green actually on the day. Let's see really quick. Mike was posting yields earlier. 30-year yields, 3.481, down slightly from yesterday in the previous session high, but still trending upwards. Excuse me. Okay. I'm going to continue to go through FinViz. We know which areas of the market we want to be long, and we know which areas of the market we don't want to be long. So that was the point of going through that. We're looking at Goog. I know that it's going to kill JP inside, but in hindsight, it's easy to point it out. So obviously this is not to belittle JP because we all make these mistakes. But Goog is a good example of the BRB. We got the flush out 2 days ago. Yesterday, we got a bounce back up into the horizontal level. We didn't get necessarily a very big bounce, so let's pretend hypothetically we grabbed this or we were looking at grabbing it yesterday. This would have been a little bit harder of an entry because normally we would have liked to move up closer to 107 or 107.5. Yesterday's high was only 106.10, so probably would have missed this if we were trying to time it. But this is the concept. You get a capitulation move through a horizontal level. The next day is generally a pullback in towards that level, and the next day after that is generally the trend resumes in the direction of the breakout or breakdown, in this case down, right? So Google is down today 2.3%. Yesterday was the area to enter. JP entered on the 6th of September and an attempt to front run it. He got caught in a 3 or 4 day little pop. And of course, because the market loves to fuck people, less than a week later, it's right back where you expected it to be originally. Trading is not just about, trying to predict shit. It's about reacting to things. And this BRB method that we utilize is a reactionary style of trading. We don't necessarily try to predict the breakdown. We identify the breakdown and understand that statistically the reaction is a pullback, and we will take the position on that pullback. So Google down 2.3%. At this point, there's no, don't enter it. It's too far gone. Mike just posted it. Yeah, I mean, we just, same thing, right? Exact same concept I just talked through. I think yesterday probably would have been a hard entry. So, but it's a great example. No, normally we like bigger pullbacks than that, but the market hates Google, so didn't get it. Okay, like I said, 12 pages here, 13 pages now. If anybody wants to help me, I posted the link. Feel free. JP posted FIS. That was actually a trade that we were looking at taking, and I think the reason why we didn't take it was because there was limited options availability. But FIS, yes, horizontal level breakdown. We looked at that last week as well. I'd like to say AT&T has a rounded top horizontal level break, but at $16 a share, I really don't want to be shorting AT&T. Not enough meat left on the bones. lot of bad consumer staples names, but there's no like flush out spot, right? Remember, think of the grocery outlet example we looked at. An opportunity to go short was there like a week and a half ago. We didn't take it as a group, and now it's just fucking dying. And at this point, it's like every day that something goes by where you miss the initial entry is more and more risk against you by taking that position, because at any point the market can reverse and you have no idea where you're going to be wrong. So try not to chase these. Good point, Mike. Admittedly, I wasn't even paying attention to Google yesterday because I think JP had already gotten out, so I don't even think it's on my watch list anymore. Let me see. Yeah, it's not, so I wasn't even paying attention yesterday. Still going through this. If I see anything, I'll post it. I'm gonna skip all of the ETFs, but there's a lot of ETFs hitting 50-day lows that look like crap. Gonna skip most of the real estate stuff as well. WeWork is an all-time low in WeWork. This is a all-time low in WeWork. $3.81. WeWork is down 75% from its peak. Here's a short that, man, I wish we would have saw. Actually, I think we would have missed it, but Dollar Tree. Or no, this isn't Dollar Tree. This is Digital Realty. Never mind. I remember we were charting Dollar Tree and what was the other one? Dollar General. Microsoft is on the scans. Okay, let's talk Microsoft. Without drawing any levels here, what do you guys think here? $50-day low. Is there an opportunity for a potential pullback on this? Or is this a missed opportunity, or is this an upcoming opportunity off of the 241.5 breakdown? This is more than one ADR off of a 1 RVOL move with 27 minutes left. What would you guys think about Microsoft? Overextended, so you'd expect a pullback to the upside potentially. I would tend to agree, and I'm sure Mike would agree now that he's looking at the oversold area of the David Cox RSI. Yeah, I would agree. So where is a logical place if you wanted to get short Microsoft to attempt to go short? $250, nice round number. Anybody else? Consolidation would most likely happen if the markets stop dumping. That's for sure. But you're right. I mean, you don't want to buy when the markets are dumping anyway. It's like you're going to get caught in the same situation as the EQT to the long. You don't want to be chasing shorts down, just like you don't want to be chasing longs up. 250 to 251.5, I think, would probably be a decent opportunity to get short Microsoft if we get back up there. That would obviously require the markets to stop dumping. But as of right now, Microsoft, I can see a horizontal level break somewhere around 251, 2515. RSI oscillating below the 50 from the end of August, giving us a clear runway to short this thing if it opens. If it opens up tomorrow and presses up into that 251 area and you want some exposure to the downside, specifically in software, this is an IGV related name. Puts are probably put debit spreads are going to be on the menu for Microsoft tomorrow. So this is the first name that looks like it's giving us a clear level to risk, which is the most important part of any fucking trading plan, is you have to know where you're wrong. Microsoft giving us a 250 to 2515 area. Go ahead and post it. Seems like a decent opportunity to try to get short if we get back up into that area. Plus those contracts are going to be incredibly cheap. So look at the chain really quick, but this is just spitballing here. We're obviously going to have to wait till tomorrow to see where we open up. It does have Novembers, but if we're going to be shorting a Microsoft BRB, it might even be advantageous to go for the Octobers since we're only going to be sitting in it for 3 to 4 days anyway. 35 IV, but this thing's going to be expensive, even the Octobers. So like I said, put debit spreads probably going to be smarter from a risk reward standpoint. I don't love it, actually, now I'm looking at the chain. The 230, 225 put debit spreads will cost you 110 for a max profit of 390. Obviously, that's going to be increased because of today's move. But I actually don't love that price target of 230. It seems pretty fucking outlandish off of an October strike. Surprised they're only paying out that much, to be honest. From current price to 230, you're looking for another 5 to 6% move off of the BRB to 230. You're looking at like an 8 to 9% move. I don't know. Seems a little far-fetched, especially if we do get caught in some sort of consolidation zone like Mike is potentially not implying but pointing out that it could happen. So Microsoft from a technical standpoint might be a play tomorrow, but I don't love the options chain. So let's wait and see how the premiums open up tomorrow. If that risk reward skews more in our favor, maybe there's an opportunity. But right now, chain isn't really giving us something that looks appealing. New 50-day low NVIDIA. There's no opportunity there, but obviously that's the bellwether name within the semiconductor space. Okay, that's all for 50-day lows. What I'm going to do now is 0 to 3% above the low. 281 names. That is too goddamn much to chart through in 20 minutes. Let's go change from open down, and we're probably going to get the exact same amount. 224 names. Once again, there is the link. $19 fucking pages of charts. So if anybody wants to help me go through these, maybe start on the back end and go backwards while I go forwards. Most of these are not going to be even worth looking at for more than 1 second. Just scan through these, look for horizontal level breaks, hover over them, see which industry they're a part of. If they're a part of an industry that we know is showing relative weakness, we could potentially short it. If not, just move on. IP is on the list. Good job. LI is on the list. Where's LI today? Tattered holding an LI short through this consolidation. I don't know if he's on right now. Tattered, if you're here, man, I don't know if you want to update us on your LI position, how long you expect to hold that or what your expiration is, feel free. Want to make sure that you feel in charge of that position. Lots of consumer staples popping up. Procter & Gamble, Kellogg, McCormick, excuse me. Dollar Tree is on this list now. Terrible looking chart though. Do not want to short that. Colgate. Dollar General looks like a better chart to short than Dollar Tree, but still doesn't look great yet. I think we're about 2 days prior, so I'm not going to post it. Going to skip through all the ETFs. Yeah, I just looked at TSCO too. I'll post it in 1 sec. Tractor Supply Company. A lot of country ETFs are on this list. A lot. Some big pharma companies are on the list. Nothing that looks immediately tradable though. SPR, Spirit Aerosystems Holdings. What the hell is this? That is a rounded top horizontal level breakdown, but I doubt there's going to be anything on the chain. Nothing on the chain whatsoever, actually. Someone's betting big on some $20 puts. I'm assuming that's a hedge for their shares to the long side. This is a rounded top horizontal level break to the downside, though. I'm not going to post it because it seems like it's way too risky on the chain. Raytheon as well. All of the aerospace names are down. For a world that is so close to being in like a world war, you would expect these military types of companies to be appreciating, not depreciating, right? Or does the market expect us not to do it? I tend to agree with the money. I think that if we were actually headed to a world war or some shit like that, the people with the money and the means to buy the information would probably be doing more about it to profit. And it doesn't seem like they're doing it. Here we go. Maybe this. I think it's Chinese. Is this Chinese or is this Canadian? DQ. We've looked at DQ a lot. Let's see what the chain looks like. Chain looks spotty. Fuck, man. Gonna skip DQ because the chain sucks. AKAM. There's a setup there. I haven't checked the chain yet, but I'm gonna post the chart. Looks just like Meta, right? For a reason. It's an IGV name. Check the chain. Zero fucking open interest. God damn it. There is a little bit on the Novembers, but realistically, do we want to be opening up $80 puts for $260? No. So skipping ACAM. It's too expensive to play for what it is. Kind of feels like if you're not already short, you're just going to be chasing here, and it sucks. All of the getting priced out of these contracts because they're either super expensive or the moves have already started. A name that we traded a week and a half ago. I'm going to remove, I have Vinny's old position on the chart. I'm going to remove that position to free up some space on the chart for everyone else to see it. There is open interest, at least as far as I know, on CRM. Oh yeah, CRM has lots of open interest on the Octobers and the Novembers. Like I said, Octobers are applicable in this type of situation for a short. Yesterday was, well, I don't know if yesterday or today. We're at that risk on level to the downside, sub 159, 158, currently 154.75. Hard to tell if this is going to be a BRB. I would probably say no, actually. I think the BRB happened earlier today where we gapped down, pressed up into the previous horizontal level, and now we're falling here. This is not an A+ setup to me, but if you do want some exposure to the downside in software, I think CRM is a decent opportunity, down 3.42% today. And it has moved more than one ADR, so it's not showing any sort of relative strength per se. It's following the broader sector. Original price target here, somewhere around 135. Could probably still run that same sort of setup. Sub 50 IV means if you want to buy puts, you can. If you don't want to buy straight puts, you can buy the 140 put, sell the 135 put for October. Doesn't necessarily need to go in the money, but you're going to be risking $94 for an opportunity to make 406. The P50 on that's not great though, so the market for whatever reason doesn't expect that to hit. On the flip side, you can grab the Novembers, the exact same contracts, 140, 135s for November. Max loss 120, max profit 380, so that is more than a 3-to-1 with a better P50 of sitting around 55. So CRM opportunity, not an A+ setup, so if you don't want to take it, totally understand. I'm not going to take it. But if you feel like you're underexposed to a broader market drawdown, specifically in regards to software names, CRM is giving you a horizontal level break to risk and risk off, and the contracts are not expensive. So one of the few names sub 50 IV with enough open interest to play spreads if you want. Once again, that's ticker CRM. Okay, Vinny said TSCO. Eyes are in the right spot. In regards to TA, I see what you're looking at, horizontal level. Something like this. You sold your LI short today for 1,250. All right. Are we gonna get an updated screenshot on that or what, Tattered? I think it's your time to shine, buddy. That's awesome. Fuck yeah. Share the love in the group. TSCO. Let's pull up the chain. It's a thinly traded name. The spreads can kind of get away from you in some aspects. TSCO is not an A+ for me either. I don't think it's necessarily a bad idea. I think it's a B+ setup. It's kind of like the CRM. It's a little better, a little worse than the CRM. But I see the horizontal level in TSCO. This is a below 1 RVol break or test, I should say. So I think we're still 1 or 2 days away from shorting TSCO if you're going to use that horizontal level as risk. I'm looking at maybe the 186.50, 189 or 187 area. The only reason why I don't think this is going to be as good of a short as something like Meta or Nvidia is that left-hand side of this local drawdown in late May. If that wasn't there, I think this name would fucking fly to the downside. But just based off of history of trying to short through previous lower lows, it just gets sticky down there. Let's see, BTI. This looks like a way better short from a TA standpoint. I think the problem is going to be the availability on the chain because this is spotty already. From a TA standpoint, though, this is way better. So I'm assuming they just opened up November's because there's fucking zero open interest. BTI. I'm assuming you're looking at the $35 puts. I'm going to go ahead and post the chart from a TA perspective. I would just be afraid of selling these at a profit. Like you try to close these things and no one wants to buy them or something. But yeah, the setup's there. This is a horizontal level breakdown. Looking at the chain at the very minimum, you got $35 puts that are running you about 17 cents. The ADR sucks though. That's the one thing. $35. If you look at BTI, the technical setup is fantastic. But if you think about it, a 1.23 ADR, and you're looking at, what is it, a $30 put? A $35 put. Looking at a $35 put, you're looking at an 11% move off of an ADR of 1.23. So realistically, you're going to need 11 perfect days-ish to get in the money. That's not saying it can't happen, but that's pretty fucking unbelievable that it could happen, specifically within 36 days, given the market oscillates. The market's pricing these in at 38% chance of even hitting 50%. No, I don't think it's a good idea. I think it's just going to take too long. Then the stock moves too slow. Even though the setup's there, I think that it would just take way too long. I think opportunity cost-wise is probably just a better place to park your cash. But the setup's there, so... Anybody else have charts? Feel free. I'm just going to go through the stuff that you guys are talking about. I don't see anything here that screams at me short right now. I'm just being honest with you. If you guys want to do, obviously you guys are grown adults. You can short whatever the hell you want. But I don't see anything that's giving us a decent R to R on the chain as well as a setup. I see either setups or good R to Rs. That's it. And so I'm not going to take anything if it's not lining up. Dustin wants to take a COP position on a pullback day, which is totally fine. What are you thinking for the actual play within COP? As you're talking through that, I'm going to look at the current positions that we're in and update anything if we need. ASO slight green today. Good relative strength. PCG bouncing off of its low, holding above the $13 area, which is, if we're building a base above 13, that's fucking awesome. Dustin is not in here, actually. I need to... Alex closed his Rivian for a 50% profit. Cool. I'm going to take it off the watch list, but congrats. Did you have September's? Were they expiring tomorrow? He's not in here. Son of a bitch. Okay, so I'm going to remove Rivian off of the watch list. Good job, Alex, when you listen to this later. Good trade. PCG building a base above 13 we like to see. Dustin is still short. Washington Digital, which hit essentially a 2-year low today. That son of a bitch. He did it again. How does he keep doing this? STEM looks just fine where it's at. Corteva, nobody got filled. EQT, normal within reason pullback. Hasn't even moved one ADR today, so I'm not freaking out about EQT. SQM, Alex entered today and closed today, so everyone give Alex a round of applause. He played Rivian beautifully and completely fucked up SQM. So if you guys weren't here this morning, he wanted SQM. I kind of coached him through maybe waiting a little bit. He bought it off the open and got dumped on. I think he closed it earlier today. Took the loss, sat in a DM with me for a little bit, and sometimes this shit happens. But realistically, I hate the term patience when people type this shit out. I fucking hate it. It drives me nuts. But realistically, you need to have some patience. Like I said earlier about the EQT trade, if you find yourself like where you can't keep your hands straight, like you're like freaking out, you're gonna miss something, you should probably just avoid it altogether, because at that point you're already fucked. And that was him this morning. When he came up with SQM, it looked like the grand slam trade. He was super excited, entered it right away, and almost immediately got fucking dumped on. So no harm, no foul. Alex made like 5 great plays prior to this, but I guess SQM just had to humble him a little bit. That's okay, though. I got bopped out of my energy-related plays last Wednesday and Thursday, prior to them actually breaking out, so I fucked up too. Okay, let's see. Airbnb inverse head and shoulders. If this is an inverse head and shoulders, this is a very long inverse head and shoulders, over 129 days. I mean, I see the pattern. I see what you're looking at. Why not? It could be. Ask Mike. This looks like something that Mike would normally identify. I mean, all intents and purposes, you got the left shoulder, the right shoulder, and you got the head with the neckline. I think my neckline's a little bit too low. I think the neckline should probably be actually above where it's at, probably around 124-ish. So yeah, today could be a potential BRB in an uptrend in Airbnb. Let's look at the chain really quick. What do you think, Marcos? Assuming you're going to be looking at the Novembers. 57.8 IV leaves it up to your discretion on whether or not you want to spread it, but assuming probably, because these are expensive. What are you thinking price target wise off of this? Perfect, dude. Same thing I got. On the chain, what are you looking at, if that's what you want to target? Got 4 minutes, guys. Any questions, feel free, butt in. If you have pertinent questions on existing positions, you get priority. Just because we only have 3 minutes left, I'm going to talk through the Airbnb. I like the 145, 150 call debit spread for November. Get them for 115, max profit 390 right now. So you're getting almost a 4-to-1 with a P50 at 55. If you like the Airbnb inverse head and shoulders, you want the Novembers, this is a cheaper play on Airbnb, and you're getting a pretty good risk to reward there. I did not close ASO.
What contracts are you looking at on Airbnb?
The 145, 150 November is probably the same ones you were looking at. That hits your price target, right? You said 148-ish, so 145, 150, meet in the middle. Right now they're going for 115, max profit 385. I did not close ASO. I'm looking at ASO as relative strength today. The market is down. ASO is not. With an ADR of 3.93, ASO has moved less than 3%. So this is a less than normal volatile day for ADR on a day where everything is dying. I love it. Matter of fact, it reinforces my conviction with ASO. So I'm going to definitely continue to hold ASO. Just so everyone's fully aware, you do not have to agree with me. And as a matter of fact, if you don't, I would love it if you voice your opinion, because creativity wins, and I don't out-trade everybody in here all the time. So I try to talk through my processes, so when I win, you can hear why I thought the way I did, and when I lose, you can learn from why. But if you definitely don't have to take what I'm saying as a fucking word-for-word Bible to profitability, because I fuck up just like everybody else. All right, we got 1 minute. Looks like Dustin got filled on COP, so he got filled on an energy play on a pullback. He probably grabbed those things for a great price. We went through the COP MRO thing extensively last week, and he chose COP. Add that to the watch list. Cool. I'm going to add Airbnb as a tomorrow watch list because now that I'm looking at the inverse Head and Shoulders, we can continue to watch that. All right. Hano grabbed an EQT 6065 December call debit spread for 90. Okay. Let's see. So what we were talking about earlier in the Power Hour session, where the guys that were able to wait and buy a pullback are going to get it cheaper than the rest. I am sitting just under break even now after being up yesterday. So we'll see. EQT price target is still around $57.85, $58, somewhere around there. OSH, yeah, spreads just never really tightened whatsoever today. Okay, so does anybody have any questions before we break? There's going to be no strategy session tonight officially. I will be on. Once again, the offer is there. If I'm in voice, which I'm on, I'm in here when I'm on my laptop. So if I'm in here, don't feel bad hopping in and talking if you have questions or whatever. But there is no official meetup tonight, all right? There's a few newer guys in here, so if you see me in here, don't feel bad about bugging me. The rest of you guys don't bug me. Just kidding, but I'll talk to you guys in the morning. Stop the stream.